What's up, you all traders? I hope you all doing well. So today we're gonna talk about a simple strategy which is beginner friendly. No congestion in charts. You will see simple chart. Just we will follow a default free indicator from TradingView. So let's get to it. So open TradingView in your browser. It's free. You can use it. A best charting app available in the market. Okay. First of all, you have to follow some rules for it. The first thing is the time frame. This strategy, personally, I back tested it with 1 hour 1h. You can see here. Okay, and it will work on Forex, crypto, and stocks, and anything, every pair. Okay, so you are good to go if you're trading Forex, if you're trading crypto pairs, everything, you are good to go. Okay, so the strategy is very simple. We're not gonna use a very congested chart. The chart will look very simple to you just by following one free indicator, a stochastic. Okay, we will use just stochastic. Okay, so let's get to it. Okay, this is now the chart is open. I'm using currently the pair Euro USD, and you can use whatever you want. What is your choice? Okay, the time frame is, again, I'm reminding you, it will work on 1 hour. Okay, yes, it can work on all time frames, but I personally back tested it 1 hour and the result is 70%, and you can get more than it. Okay, so click on the indicators here. We need just a simple stochastic here. So you can tap here. You can see here stochastic, make it favorite, click on it. Okay, you can see the stochastic is here. One more thing we have to change, we have to change the candlestick to Japanese candles, which is called Heikin-Ashi, and I will tell you that why this is important. Okay, so click on here, you see the candle here, click on here, you go here and click the Heikin-Ashi. Okay, click this. Now what you will see that the candle are changed to Japanese candle Heikin-Ashi. Okay, I'll tell you the idea for this. You can see here that we are seeing a consecutive green candles. If you see these candles on the normal candle bar, for example, I'm switching back, you can see here, you are seeing that here you can see the candle is red. Now you are trading with this thing and you see this red candle and you are panicking, you are panic selling that the market is getting reversed, and you get out of your trade. But when you switch to Heikin-Ashi candle like this, okay, you can see that the second candle is still green, the volume is kicking in, and you are good to go. You can go with this trade, you can hold the trade for more profits. You can see here. Okay, and it works. We will test it right now. Okay, so the idea is simple. There is a stochastic indicator, no need any of the settings, it is a default one. Okay, and just we have to implement the Japanese candle with it. Okay, so now we are if you wanna take a long position or a buy position. Okay, so we will analyze the market. We will see right here. Okay, I'll tell you the basic rule for it. For example, now here you can see. Okay, the simple rule for this strategy you have to copy is here, that you can see the market is going in a downtrend. You can see here. Okay, you have to wait for this trend. You will not trade here. You can see the stochastic is in the middle. Our goal is for this strategy, so we will trade here. You can see here the crossover, and here when the stochastic hits here, we are looking for short positions, and if we found the stochastic here, we are looking for long positions. This is the basic simple idea. We will not trade here in this channel. Okay, so you have to follow this rule. You have to wait for this movement in the stochastic. Okay, you can see here. Okay, let me remove these all things. Okay, now you can see, now you can see here very clearly that the stochastic is moving here and it's getting crossover. But one more thing, you have to wait for the crossover, and you have to be waiting for the momentum to upwards also. As you can see here that we get a crossover here, but now you see here the Japanese candle, it's still red. So it's not our trade. We have to wait for at least one green candle. Doesn't matter if it is doji or whatever, but we have to wait for the green candle, and also we have to wait for the momentum of the stochastic to be upwards like this. You can clearly see here. Okay, now we spot this green candle, this one. Okay, so we will open a long or a buy position here. We will take here. Okay, the most important thing is here the risk to reward ratio. It's important. Okay, you have to make it 1 to 1.5. You are risking 1% to gain 1.5%. Okay, so what about the stop loss? The stop loss will be your previous swing, immediate swing. You can see here that the market has bounces from here. You can see this is your recent swing. You can see here. Okay, so here we'll put our stop loss, and after that, okay, we will take our trade to 1.5. You can see here 1.5. Okay, now you got my idea. Now this candle is your entry candle. Doesn't matter where you got entry in this. You can enter here, you can enter here, doesn't matter. But when you see changing of the momentum here in the stochastic to the upward and the candle is getting green, now this is your trigger candle. You have to enter here. Okay, and immediately you put stop loss. First of all, here the recent immediate swing, this is your stop loss. We have to risk low 1% to gain 1.5. okay, and you can see boom, after our entry, the market, our target is, I think, in the second candle. It just in 2 hours you will get your target. Okay, one more thing you can follow here, the Japanese candles. Okay, if you are monitoring live the market and you are sitting in front of your screen, you see that the next candle is also a very big green candle. You can see here, so you can wait for this target also. Okay, as far as the candle changes its color into the red right here, so this is your exit point. Okay, you can follow this method also, but for the safe side, we don't have to be greedy here. The 1.5 risk reward ratio is good for you. Okay, it is just 2 hours and the target is hit. I'll show you one more example. Let's see one more long example. Yes, and you can see we have found again another the long position here. Let's see the safe one. Yeah, you can see here that we have missed a very good trade here, but our condition not met here. Our condition is we have to catch this oversold area. Okay, we have to catch this area. So ignore this. Yes, it's a good trade, but ignore this. Okay. Okay, let's see another trade. Yes, you can see here we have found another trade. You can see it is an oversold area, and then the momentum has been. Yes, you can take this trade also. Just you have to wait for the stochastic momentum to be below the 20 line. When it goes up, then it's also you can take the entry here. You have to be waiting for this movement. Okay. You will not trade in this channel. Okay, just keep this thing in mind that you have to wait for the oversold and overbought areas. It's important in this strategy. You can see here we have got a very good trade here. You can see here the crossover is happening, but here you can see the candle is red, so we will wait for the green one. Here now you can see we are entering onto we have seen here a green candle. Okay, but you can see the momentum is again down here, so we will skip this also. We will wait for the momentum like this. Both of the signal lines of the stochastic should be upward. You can see here, so this is our trigger candle, and the candle is also green. Okay, you can see here this is our trigger candle. It's green. The momentum, the crossover happens, and now the momentum is literally upward. You can see here. Okay, so this is our entry candle. So we will take a long position here. Let me show you. Okay, this is our trigger candle. Let me zoom out, zoom in, so you can see clearly. Now here you can see our stop loss. It's very tight stop loss. You can see this is the recent swing, and make it a little bit below of these wicks, so you didn't cut up in the SL hunting or the swaps or in the spreads. Okay, it depends on your forex broker or whatever exchange you are using. So keep this thing in mind that stop loss should be below a little bit of this wick, so you are safe in the SL hunting. This is important. You can see that our trigger candle also come near to our stop loss. You can see here you will be stopped out after your entry, but Our stop loss is a little bit here below the wick, so we are safe here. But you can see after that our sorry, we have to put 1.5. It is very important also. Okay, 1.5. You can see we have cut the movement and cut the trade here in 2 hours, in 2 candles we are finished here. And the next option I told you about the Japanese or Hakanashi candle. If you follow this, you can see guys, the next is also green, the fourth one is also green. You can hold the trade until the color changes to red. You can hold here and the profit goes on, and after that whenever you see the red candle here, the color changes, this is your next exit point if you are watching the trade. Okay, otherwise the 1.5 risk reward ratio is good enough. You can take the trade, put stop loss, put TP, and you can go for a walk, leave the screen. It's a good thing for you. Okay, now let me show you some short or sell examples. Okay, we will find basically the idea is the same, but opposite. You have to follow the opposite stochastic settings. Okay, let me show you an example here. We can see that where we can find a short example. Yes, you can see here. You can see here the stochastic just get out of this 80 line and then again it retraced it back. So we have to wait for the red candle also. Our one confirmation is done here, but we are seeing green candle, so we will ignore this. We will wait. As far as we see the red candle here, now this is our trigger candle for short. Okay, so we will take entry here, and the stop loss I told you that keep it above, a little bit above the wick, so you can save from, you see is this doji candle, you are safe from it. If you put stop loss here, then you will be stopped out. If you here, okay, so make it little bit of out from the wicks. Okay, like this. Yes, sometimes it's a bit risky, but it works guys. You can check it out. Okay, now you can see here the 1.5 risk to reward ratio. We have to make it 1.5 like this. Yeah, okay, and you can see in 1 2 3 in 4 hours this target is being hit clearly. You can see this. That's the power of the Japanese candle, the Hakanashi candle. That's giving us early confirmation that the market is getting red, the selling. You can see here. So the power of this Japanese candle and the stochastic also, it's a good indicator. But we have combined this strategy with the Hakanashi candles, and it's really simple, especially for the beginner traders. Okay, the most simplest thing it is. So you have to master it. Try it on your demo account. And first try it at least 100 times. Try it. For me, it's working 70%. You can expect 70% result. It's a very good result. Okay. Now you know the examples of short also, and I also have told you the long position. So this is the basic and simple thing, guys. It's crazy. This thing is working. Okay. Let's try it one in crypto pair. If you want to try it, we will open BTC. Let's check it out, what it's working in BTC or not. Sorry, in crypto. Well, in crypto you have to look the other aspects also, cause the crypto market is moving alongside, as you know, the BTC, and you have to see the BTC dominance, etc. You can take, but I think it work in the crypto also, but you have to analyze the market more. And you have to monitor the BTC movement plus the BTC dominance, whatever. And the crypto market is very volatile. But if you see, this thing works in crypto also. You can see here, if we got here, it's a very good trade. You can see. Okay, now our first condition is the crossover, but we have to wait here because the candle is red, so we will not enter here. We will wait for the candle to be green. Now the candle is getting green here, you can see, but our confirmation is, you can see that the stochastic is still, it's not moving upward. Okay, so we will wait for the confirmation here. Now here you can see that the stochastic momentum is gaining up, it's upwards, and this is our trigger candle for the BTC. This is okay, you can see here. So now if we take a long position in this candle, okay, now for crypto you have to set stop loss a bit. You can see here, because the crypto is very volatile, so we cannot put very tight stop losses. Give it some room, guys, because the BTC, you know, it's the crypto market is very volatile, so we have to give it a bit of room here. Okay, now this is our this is our stop loss, and now the idea is 1.5. so we will check this 1.5. Yes, you can see that our target is hitting here also, in it is the BTC. If we follow the Japanese candle here, now this is a very good trade, guys. You can see if you are following the Japanese candle here, managing your risk, trailing the stop, man, this thing is go. You can, it's almost 6.5%. You can see here, it's a very good trade. Okay, now it's up to you, but personally I have tested this strategy on a forex, and a forex it's giving very good result, and the crypto it also works. I have shown you, but I've told you that in crypto market is very volatile. You have to see the other aspect of market also, the BTC movements, things like that. Okay, so give it a shot, guys, and try it on a demo, and you will check. At least you have to test this on a demo for a week. Just test it for a week, and if you get your desired results, then you can go with it with your live account. Okay, guys. Okay, tries, we will sum it up here. Thank you very much for watching, and see you in the next one.